So a really common question I get, because people are doing Google searches and trying to learn about company structure and LLCs, people ask the question, what is a charging order? A charging order is essentially a lien that can be placed on the distributions from a limited partnership or an LLC. It's compared a little bit like a wage garnishment against you personally. For example, if you have a wage garnishment and that wage, basically your employer holds that money out of your paycheck and pays it on your behalf to satisfy that wage garnishment. A charging order is kind of the same thing except for an LLC. So let's say, for example, you personally get sued for $1 million and your claimant sees that all of your assets are held inside this LLC. So they might go after your LLC and try to get a charging order against your LLC. Essentially what that says to the LLC or the management of the LLC, it says, as you pay out distributions to this person, you need to pay us first to satisfy this judgment. Now, the cool thing about a charging order is your claimant or creditor can't touch, if it's in a state where you have a sole remedy of a charging order for a creditor, meaning certain states, Wyoming, for example, the sole remedy they allow for creditors coming after assets in an LLC is a charging order, then that's a good thing. Some states are not like that. Some states will allow, for example, Florida is a good example. If it's a single member LLC and you've got a bunch of assets in there and somebody sues you personally, there's plenty of case history in Florida that has shown they will penetrate that corporate veil, so to speak, and they'll go after the assets inside the LLC to satisfy the judgment. Whereas in Wyoming, for example, the courts can't do that. The sole remedy claimants have against those assets is what's called a charging order. And that charging order just says, well, manager, as you pay out distributions to this person, you need to pay it to the court first to satisfy this judgment. Well, the cool thing about that is if you're also the manager of your LLC, you can choose to not make any profit distributions in that year. So you can say, well, this year we're not making any profit distributions out to this member. Even if you're the member and the manager, even if it's a single member LLC, you as manager can choose to not make a distribution to you as a member. And in that case, then your creditor or your claimant has an uncollectible judgment. And they're going to have an accounts receivable for whatever the judgment amount is. Let's say $1 million. They're going to have an accounts receivable for that amount of money. And they potentially could have a tax liability, depending on their accounting system. They could have a tax liability on that $1 million in accounts receivable, which won't be satisfied if you as manager choose to not make a profit distribution. So charging order protection is pretty important. And if you're really trying to protect assets, going to a state like Wyoming that has a charging order as a sole remedy is a very, very good option.